Hello. On behalf of the Society for Benefit Cost Analysis, I'd like to welcome everyone and thank you for joining us today. We are really excited about launching the Society's online webinar series with today's discussion of assessing ways of saving lives during the COVID-19 pandemic. However, before we get started, I'd like to cover a few housekeeping items. First, all attendees will be placed on mute and will remain so for the duration of the presentation. But if you have a question, we'll try to answer them at the end of the discussion, so please submit the question using the chat feature at the bottom of your Zoom panel. Also, please note that this session is being recorded and will be posted shortly on the Society's website. I'd now like to introduce your speakers for today. When policy discussions involve trade-offs between economic activity and mortality risks, the person most likely to be consulted or cited is Kip Viscusi. He's a pioneer in developing the key concept used in such analyses, the value of a statistical life. Kip is the University Distinguished Professor of Law, Economics, and Management at Vanderbilt Law School and a former president of the Society for Benefit Cost Analysis. For today's talk, it is also worth noting that he recently authored the book, Pricing Lives, Guideposts for a Safer Society. Kip will be interviewed today by Tom Kniesner. Tom is University Professor at the Claremont Graduate University School of Social Science, Policy, and Evaluation. He is also the editor of the Journal of Benefit Cost Analysis. Tom is particularly well suited for today's topic, given his extensive research into assessing the level and distribution of the economic benefits of life-saving government regulations. The Society is very grateful to have them both here today, and so without further ado, Tom, please take it away.
Thank you, and good morning for those of us where it's morning. So Kip, why don't we start off by asking you, why are economists now discussing the appropriate response to coronavirus risks? Isn't that just a medical or political issue?
Well, this is the kind of thing that economists do all the time in regulatory contexts. So worrying about risk probabilities, the health impacts of these risks, the cost to address the risks. So the whole idea of conceptualizing and valuing these policies is very much in the economist ballpark. And it is the kind of thing that all of us have been doing for decades.
But isn't this much different than the analyses economists usually do? Isn't the matter of saving lives just an ethical question?
Well, the saving lives are the things that I value. So it's valuing risk to life. So that's where the value of statistical life comes in. So the benefit for any government regulation or any government policy is society's willingness to pay for the particular benefit. And in this case, what we are monetizing is your willingness to pay for a small reduction in risk that is resulting from any of the myriad of COVID-19 or coronavirus policies that we've adopted. So in this situation, I would apply the same kind of value of statistical life approach that we use in other policy contexts as a way of reflecting society's willingness to pay for the benefit.
So how about briefly explaining the concept of value of statistical life, or VSL, in terms of how it's calculated, and why not just use the present value of earnings loss from people that are killed or die?
Well, the present value of earnings loss when people die is what the courts use after you're dead. So if you're run over in an automobile accident, the amount of compensation that will be paid out will be governed by the present value of your lost earnings, and often they deduct the value of your consumption. So let's say reduce it by 40% for the consumption of the deceased. And it's a way of monetizing what's the income loss to the family. However, from the standpoint of your willingness to pay for reducing your risk of death, you also have to take into account, you not only care about the income loss to your family, you care about the fact that you're dead. So that's sort of the driving force behind the valuation. Government agencies used to use the present value of lost earnings as a way of calculating what they call the cost of death. They said life is too sacred to value, therefore we're going to calculate the cost of death. And for the cost of death, they used the present value of the lost earnings. But instead of that, I suggested that you use my value of statistical life numbers, which back in 1982 were $3 million, or just about almost $8 million in today's money. And doing that increases the benefits you get from government regulations by a factor of 10. So not only were they using the wrong number, for the wrong reason, saying that they just called it the cost of death, they weren't really valuing mortality risks, but also they were using too low a number to value risk to life.
Now, you talked about willingness to pay, but we have to estimate it in various contexts. So you want to just amplify a little bit what those contexts are, consumption, job?
Well, the main context where we've gotten the numbers, including some that we've co-authored as well, is from the labor market. And so I've been doing labor market analyses since the 1970s. And the analyses have improved over time because we have better data. So now we can match when we look at large samples of workers, you can match to the workers the risks that are specific to the kinds of jobs that the workers have. So we can characterize the risks in terms of the worker's industry, the worker's occupation. You can take into account the worker's age, immigrant status, gender, lots of different characteristics to try and fine tune what the measure is of the job risk facing particular workers. Using these data, you could then figure out or estimate what is the wage premium workers get for this risk. And so these are the sources of the value of statistical life numbers from the labor market. The average annual fatality risk now is about 1 chance in 25,000 a year for a worker. In the earlier years, it was about 1 chance in 10,000. And so it's the risk trade-off for these small risks that are used to construct the value of statistical life numbers.
Now, hasn't this also been validated in things like product markets and other contexts, willingness to pay for safer cars or bicycle helmets and things like that?
Yes, for example, you've done it for airbags, was one example. I've done it for used cars, safety of used cars. I've also done it for living near hazardous waste sites. What's the cancer risk of living near a hazardous waste site? So you can do it in lots of different contexts. So any situation where people are making market decisions involving risk, you can look at what effect does the risk have on the price people are willing to pay for the good. So safer products command a higher price. And what's the wage commanded for a risky job? Riskier jobs command a higher price, a higher wage in order to do the job.
Now, it's used in government agencies, not just in the US, evaluating like health and safety regulations more generally. You want to expand on that a little bit on how the numbers are used or what you've done there?
Well, government agencies originally were anchored on the low numbers, so they're anchored on the present value of lost earnings, but they've gradually increased the numbers over time. And in my book, Pricing Lives, which is back here, anyway, giving it the plug, in my book, 2018, Princeton University Press, and that book, I advocate a value of statistical life number of $10 million in 2015 dollars, which would be $11 million in current prices. So what this would mean, the way you get these numbers, where these numbers come from. So if a worker faces 1 chance in 10,000 risk of death, and you have 10,000 workers like this, and each of them gets paid an extra $1,000 a year for this job, then the value of statistical life for this group, you get 10,000 workers, each of whom faces 1 chance in 10,000 of death. On average, one of them is going to die, and they're being paid 10,000 workers times $1,000 each, or $10 million. So that would be the genesis of how you calculate these numbers. So anyway, in current dollars, I use the number around $11 million. Government agencies now are also in the $9 to $11 million range, somewhere in that vicinity in terms of the numbers that most of the government agencies now use.
Now, other countries use VSL in their policymaking, not just the US. You want to tell us a little bit about how it might be the same or different than what we do in the US for thresholds?
Well, it should be different because they're poorer than we are. And the value of statistical life, how much people are willing to pay for reducing mortality risks, is going to vary with your income. In fact, it goes up fairly substantially. So internationally, a 10% increase in your income will lead to a 10% increase in the country's value of statistical life. Or since everybody else is poorer than the United States, except for, I think, Qatar, where I'm not sure the money is redistributed to the population at large. But anyway, because they're poorer, you would apply a lower value of statistical life in those countries than in the United States. And I've calculated those numbers. Some of those I did with Clayton Masterman, a co-author, student co-author, now a graduate. And you can actually determine what would be the appropriate value of statistical life, extrapolating from the United States, and then essentially reducing the US numbers for these other countries. After you do that, the numbers still end up bigger than what these countries currently use. So what I claim in my book is that countries throughout the world are still considerably undervaluing risk to life because they remain too hung up and anchored on the old approach that they used to use, which is based on the present value of lost earnings. And it takes a long time to eventually move up to a more sensible approach.
Yes, I should point out to the audience that much of what Kip is talking about, particularly with Clayton or himself, is in the Journal of Benefit Cost Analysis in the last few years. So you can get a good flavor of this topic by reading the Journal of Benefit Cost Analysis. Now, what about, let's connect VSL to the pandemic, current research about what to do or how to do it. And do you have some papers you want to suggest people read about this quickly, including your own work with respect to the pandemic?
Well, I have a paper coming out in the October issue of the Journal of Risk and Uncertainty, which goes into all the topics that I'm talking about today, but telling you how I would do it in terms of covering all the terrain. I believe you have a paper in that issue as well as Jim Hammett. There's also a really great paper coming out in the Journal of Benefit Cost Analysis by Linda Thunstrom and her University of Wyoming co-authors, where they actually crank through a benefit cost analysis, analyzing whether the initial shutdown was worthwhile.
Yeah, that paper's already in early view. You can look at it now, and the issue should be out this week formally. Now, how about fine-tuning the analysis, such as taking account of age or other demographic, income, sex, race, because that's going to come up in many of these papers too.
You know, the more you fine-tune these things, the more people are going to hate you for being an economist.
Yeah.
So all of these things tend to be very controversial. And so often there's a trade-off between what's the right efficiency answer and how does society conceptualize the appropriate equity issues. In the case of age, I know you and I have done, with Jim Ziliak, an analysis of the Clear Skies Initiative, trying to show, well, what happens when EPA in that situation devalued the lives of people over the age of 65 by 37%. Well, does it make a difference if you use age-adjusted values of statistical life? In that situation, it didn't matter a huge amount. So the value of statistical life does tail off with age, but it doesn't drop off the table. And with respect to all these age issues, which I think is particularly prominent, how people want to think about equity differs. So is the equitable solution to value all lives the same, in which case you'd use the same value of statistical life for everybody? Or is it that you should value each person's year of life? Each year of life for each person should have the same value, in which case older people, particularly those 85 and over who are being killed by the COVID-19 pandemic, they would tend to have a lower value of statistical life. And you can calculate their value using value of statistical life year numbers that I've estimated.
Yeah, one of the things I've always tried to emphasize that's a little salty here is that some of the people who don't like the concept of VSL don't make the connection that it's higher than other measures, and that makes the benefit of safety higher. So it's always a little strange when people who want to promote more safety want to pick a low value of safety to talk about.
These numbers, people tend to think you're devaluing life until they hear what the number is. They say, "Oh my God, I didn't know my life was worth that much." And
well, the
so
alternative is, some of the things we're all doing right now is, I don't want to use medical costs of having a non-fatal COVID infection because that's nothing basically. And what is the cost of a death right now for people that die young or old? A few days in a hospital. I mean, that's at $1,000 or $2,000 a day. That's not what we want to say that is the benefit from preventing that death. I hope.
Sure.
Now, economists have written about the initial lockdown, which is in some places, including where I am, the recommendation is to re-lock down. So what does economics have to say about whether things ought to open up or not open up or close up again, you think?
Well, I'm currently locked down myself, enthusiastically locked down. And I think what economists do is that we give you a methodology for thinking about it. So when they're thinking about, well, should you open up hairdressers? Should you open up bars? Try and think of what are the incremental benefits from doing that? What are the incremental costs? And you can't always put a number on these things. You can't calculate them, but at least you're conceptualizing the issue correctly. In most of these situations, the best you're going to be able to do is have some subjective assessment. Well, if we open up bars, then we'll have an extra 1,000 cases. Make a judgment. What's the health cost of that, and what's the benefit associated with it? So thinking about trade-offs, at least thinking like economists, is probably at least a good start in these situations, because we're not going to have numbers on these different things. I mean, it's like, this is reminiscent of after the terrorist attack. There's a sense that we should undertake precautions after the 9/11. Now, nobody can tell us if we don't take these precautions, what's the number of people who are going to die because of plane hijackings next year. So there was not a number that people had for that, but yet government agencies would have to make some assessment. Well, if we undertake this, in order to justify the cost, it would have to save, let's say, 50 lives. And in our judgment, it would do that. So that would be the way you could approach it.
Right. Unfortunately, what we learn in basic economics is that the optimal amount of bad things like crime isn't zero. You just have to tolerate some of this. And although you don't want to come off like saying the old saying, the problem with youth is it's wasted on the young, and then the young people come back and say the problem with wisdom is it's wasted on the elderly. So, right. Now, you're working on other health and safety issues that involve VSL that may or may not involve COVID. You want to tell us a little bit about what you're up to?
Well, I've been worrying a lot about police shootings, which have been in the news. So I have a paper with Scott Jeffrey coming out, University of Illinois Law Review. We're doing more work on that topic now, which is what's the role of the value of statistical life with respect to police shootings? So there are other deaths, not just from shootings. You could be choked to death by police as well. So how should we think about what the appropriate damages should be in those contexts? And so I've written about what's the role of value of statistical life, particularly in setting punitive damages. So if you find a situation where the killing was malicious or reckless or displayed a wanton disregard for the safety of the person who's being dealt with, then how should you think about what the court should award in damages? And generally, these people don't get big damages. It's very hard to win at all. When they do get damages, it's more on the order of $1 million or less. So the only exception that I've found is Justine Demond in Minneapolis. She was the woman who was shot to death by the police. She's from Australia. My wife and I, Joni and I, were in Australia at the time when she was shot to death in Minneapolis, and it was front page news there. They were just in shock. The police would shoot somebody and kill them. And so in that situation, their family got $20 million, but except in that rare case, the damages tend to be very low. So the value of statistical life in these situations could, first of all, serve as a mechanism for setting appropriate damages when punitive damages are warranted. And also municipalities could use this number when they're trying to conceptualize how much is it worth to prevent these killings, then they could apply the value of statistical life. So we've calculated for people who are fleeing unarmed from police, what's the value of statistical life associated with these killings? And it's in the billions of dollars. So and then you go through the different gradations of culpability, fleeing and unarmed, fleeing and armed, not fleeing and unarmed, or not fleeing and armed. So different contexts. Not all police shootings are unwarranted, but some of them certainly are. And then you want to incentivize the police department so that they do strike an appropriate balance between the safety of the public at large and then the well-being of those who they're chasing after.
Now we're starting to get many questions come in from the audience, so I'm going to try to get at some of those now with the time we have allowed. One of them is, I know you've done work on like how you die, like from cancer or some other situation. Is that what do you want to tell us about that?
How you die does matter. So the numbers from the labor market are those for traumatic occupational injuries. In some cases, there's prolonged hospital stay after it, like a burn injury, for example. But usually the deaths they're accidental deaths of various kinds. That's different than cancer. They're not painless. And so with Alyssa Phillip Gentry, my former student, now professor at Washington, FSU Law School, we estimated for looking at these fatalities, what's the share of the value of statistical life attributed to the morbidity loss? And it ends up being a non-trivial amount. It varies depending on the impact, anywhere from 6 to 25%. So part of the value of statistical life does reflect the morbidity effect. But then there are other illnesses with prolonged hospital stays, like cancer, which are much more highly valued than occupational risks or transportation safety, where it's also a traumatic death. And we found a 20% premium in a recent study for cancer deaths because of the associated morbidity effects. And there are other estimates of the premium out there too, depending on the nature of the morbidity consequences of the treatment. So yes, how you die matters, but certainly no matter any death, the biggest thing you're losing is your life. So the fact that you're dead, the risk of death and being gone is the biggest welfare loss, and the things can be the driver of the willingness to pay. So I would still start with the value of statistical life as the starting point. I'd also recognize that being killed on the job is not painless, so that the fact that other deaths involve pain and suffering as well does not necessarily distinguish them. It's only if they're more painful than job deaths, and how much people be willing to pay to avoid these risks, or reducing these risks. That would be the driver. Government agencies generally don't make this adjustment. In the UK, they've periodically made adjustments for cancer, giving it a higher value. And there's been discussion in the United States of doing that, but I don't know how much that's taken hold.
Right. You've also done work on natural disasters and terrorism. So how you die has touched on that too. So some audience questions, some of which get into some very interesting, subtle issues. So one is, one of our viewers wants to know that when I think about medical ethicists and craft guidelines for extreme events such as ventilators that might need rationing, explicitly recommended and expected longevity is involved in prioritizing one patient over another in the medical care industry, but when economists attach a dollar value on the remaining lifespan by using a value of statistical life year rather than a value of statistical life, we are accused of being cold-hearted death panelists. Is this an apparent double standard, and what are your thoughts about?
Well, I actually have a chapter on that issue in my book. And
Award-winning book, I might add.
Won the American Risk and Insurance Association Book of the Year award. But one of the issues has to do with what number you're putting on the life years. So that in the UK, which is where they really do monetize these things, they put a value on each year of life. And if your life, extending your life by an extra 5 years costs more than this amount, it's not worth doing. So this would be the analog of the death panels people were worried about. Well, the numbers in the UK, as I show in my book, they're off by a factor of 10, even for the UK. They're too low. So yeah, if you're going to set some budget price on what every year of life is worth, then sure, people are going to go ballistic and say, economists are sort of, too cold-hearted and doing the wrong thing. In the United States, the number is about $500,000 per year of life, per expected year of life in terms of the value of statistical life year. That's a fairly substantial number, since most people have some life expectancy. Even if you're old, you may have, if you're 85 years old, your remaining life expectancy is 6.6 years. So, you still come up with a $3 or $4 million value, even if you use value of statistical life year. Whether you want to go that route depends on how you want to make your decisions. But you can do the calculations, and the calculations, if you do it correctly, are not always as low as people assume that they are. As to why people get upset at economists, I'm not sure that they are that upset. Like, I've never had anybody be upset with me talking about value of statistical life year. I think they get upset when they have these visions of Sarah Palin and these visions of death panels that would be coming. I think people would be uncomfortable with doctors talking about that too. Should we pull the plug on this person because this person's 85 and there's somebody down the hall who's 70? Well, in that situation, if somebody has to, it's an either or choice, and they're trading off a life for a life. So that doesn't seem as controversial because there's a constraint on how many ventilators they have. But if they just said, oh, you've hit this age range, and because you're this age, we're not going to waste our money on a ventilator for you, that would be a different issue. And I think that would be much more controversial, even for doctors to do that.
Now, one of our audience members points out that there was a recent article in the Washington Post that reported on projections of reduced births in the near future due to COVID panic, and went on to apply a $10 million VSL for a non-birth. Do you consider the use of value of statistical life for people who could hypothetically exist in the future to be appropriate? If not, how do you see this example of not having as many taxpayers and relatives in light of the larger phenomenon of non-economists maybe not fully embracing or understanding the value of statistical life?
Well, the value of statistical life generally pertains to how much people who are currently alive are willing to pay for a reduction in risk. And so if you're talking about births that didn't happen, the value typically would be how much would the parents have been willing to pay for this additional birth. And usually they can just shift the timing of the birth. So instead of having a baby this year during the pandemic, wait a year, and so that there's not a total loss. And this issue also comes up in other contexts as well. So I've taught in various programs on this concept, and the anti-abortion people point out that, well, they want to apply a value of statistical life to all the dead babies. And so that if you start going down the road of valuing the statistical life of the unborn, you may want to think about all the different contexts where it comes up, and does it really make that much sense? Well, thus far to date, in the United States policy, we've restricted ourselves to value the lives of those currently alive, which I think is easier to do.
One of the interesting questions that's popped up from the audience is in the transportation sector, where one could argue that there's a hedonic factor, the perception of control, which might affect the relative valuation of mortality risk in air travel or auto travel, and possibly, change the relative value of safety when you think about autonomous vehicles or piloted vehicles. Even though I'm a much worse risk driving myself than the airline pilot is driving me in the air. So do you think that kind of autonomy or control is important in general, and in particular for COVID policy decisions?
Well, to the extent that people think that they have control and therefore face a lower risk than average, they're not going to be taking appropriate levels of care. In the case of the auto situation, at least I found for used cars, you found for airbags, when people buy cars, they're at least willing to spend a substantial amount on safety. So even though they may have this illusion of control, that when it comes to the actual trade-off, they're willing to pay substantial amounts for safety. Whether people getting behind the wheel are excessively cautious, incautious or bold because they think they're much better drivers than they are, it's not clear to me that that's a big problem. The flip side is getting on a plane because it's not under your control. You think that the risk is much greater, and unless it's a Boeing 737 MAX, then you're probably not at much greater risk than you would be driving yourself.
Now, one of the issues that pops up in people I talk to, as well as some of the audience questions, is what exactly, given that the risk of death has an effect on VSL, meaning it's non-linear or non-constant. What do you think is the right way to think about the risk for COVID? I mean, there are about 1 million to 2 million people infected, but 100,000 die. We have 300 to 350 million people. So some people think the risk of death is 1 out of 100,000, but it's not taken at large. It's 100,000 over 300 million, because everybody's at risk, kids, everybody. So do you think that getting the comparison point right is being done, and what do you think the comparison point is?
Well, the size of the risk change doesn't bother me too much. If you look at labor market studies, they do include workers in some pretty high risk jobs.
Right.
What I have shown is that if you're valuing a risk change of 1 in 1,000, so if you're doing a policy that reduces the risk to society about 1 in 1,000, as opposed to a smaller probability like 1 in 10,000, then the value of statistical life is about 8% less. So it would be a little bit less. And the flip side, if you're increasing the risk, so if you decide you're going to increase the risk by opening up bars and restaurants in California, in beaches where you are, then the willingness to pay for reducing it goes up. It actually goes up by about 10%. If you increase the risk by about 1 chance in 10,000. So that, large changes in risk do have a slightly different value. However, most policies that we have, you're looking at the global thing. If we did nothing for COVID-19 versus if we did everything, sure, that's a huge swing in the probabilities. But most of the decisions we're making are not quantum leap decisions. It's like, will I get a haircut? And I don't know if you've noticed, but I succumbed and I've gotten a haircut. So that, yes, I've done the small marginal change in riskiness. I'm willing to do that sort of thing. And for that, I would use my value statistical life number, now $11 million, to figure that out.
Yeah, I'd like to point out for people that there is, research by economists, long-time research on very, risky situations too. So it's not like we haven't studied these. There's, test pilots versus airline pilots. There's Sherpas taking people up Mount Everest. There's dangerous catch, people who catch fish in in the Atlantic, and there are people who study janitors who clean out the inside of a nuclear reactor, all right? And their pay differential, which is 16 times a regular janitor, for example. So it's not like we haven't thought about this a bit. So we have some more time, so let's do some more audience questions. Let's see here. Now, one of our viewers said he saw a recent NVR working paper by Pindyke that argued that VSL shouldn't be used because of this high COVID level and asymptomatic and unreported cases, that the infection rate might be 1 in 1,000, and that VSL applies to risk intervals about 1 in 10,000. So is 10 million VSL or something lower what would make sense to you?
Well, I think we already addressed that. If there's a 1 in 1,000 swing instead of 1 in 10,000, then you can estimate how you would adjust the VSL, and you still go based on the individual preferences, but you have to have knowledge. You basically make assumptions for estimated worker utility function, and you can estimate what the VSL would be for other changes in risk. But yes, I would not throw out the methodology or the way of thinking about it just because it's a larger change in risk than 1 in chance in 10,000. Now, I haven't seen the current version of his paper, but he wrote to me and sent me an earlier version that I commented on. Okay,
It's with a little bit of time we have left, there's a concern that maybe we haven't paid enough attention to policies to respond to the pandemic, but also insights it might have for the issues raised in the Black Lives Matter movement. What would be your insight on that?
I think it goes back to how can we get the country and municipalities to value lives appropriately. And the value statistical life still provides the guideline, but I think you have to increase the situations in which there can be meaningful damages. So I think right now the police have more legal protections. It's very hard to sue and win these claims. And so I think some of the concerns that they have with trying to make the police more accountable certainly makes sense. But ultimately, the decisions these are only going to be incentivizing the municipalities to do the right thing. So that there has to be I'd say a decentralized application of benefit cost analysis by police departments to analyze what are the measures that they can take to reduce these deaths, value these deaths appropriately, and then figure out what are the constructive efforts that they can undertake.
And another question the audience raises is about the sensitivity of VSL to the state of the labor market. Are wages cyclical, and does it depend on, how much does the premium depend on when you are examining the premium?
Now, I've actually been gotten estimates over a period that spans almost 50 years. So it's data from the 1970s through recent years, and after you do the inflation adjustment for the CPI, the numbers end up being pretty close. They don't bounce around as much as you'd expect. And as a practical matter, this is probably the worst recession or depression we've had in 90 years. And I don't notice a lot of people, gravitating to risky jobs and, changing what their risk trade-off would be in other dimensions, not caring about safety. So I think the fact that there's an economic downturn, yes, it could matter, and income matters. So in the United States, we've got income elasticity of the value of statistical life that's less than it is internationally. So a 10% decrease in your income will have a 6% decrease in your value of statistical life. So it doesn't, plummet, but it does go down a bit. But at least in terms of the estimates, doesn't seem to mess them up too badly.
I'm in charge of having the trains run on time, I guess because it's the German Italian in me. So what would you like to say to the audience before I turn it over to Craig as your parting wisdom on the topic of value of statistical life and what to do with it?
I think we've covered a lot of stuff. I'd like to thank the audience for even tuning in the morning, because for a lot of people, this is early, especially those on the West Coast. And I think, approaching all these things, starting to think like economists, and when you start worrying about economic loss, it's not just the economy. The lives lost or your illnesses, that's economics too. So there's a tendency to say, the economic issue is the lost jobs or the decreased output versus the health people, whereas the health people, that does translate into economics as well. So really it should be a battle of economists versus economists as opposed to economists versus the health peoples.
Right, as someone married to a health economist, there are people that worry about the economics of health issues. So in the few minutes we have left, I'd like to turn it back over to our president, Craig Thornton, for some parting words.
Well, thanks, Kip and Tom, for all that informative discussion, and for the people sending questions. I'm sorry we couldn't get to every question, but I hope you'll find it useful. As you can see here in the picture, you can get more information from Kip's book, but you can also, as Tom said, look at the website for the Journal of Benefit Cost Analysis. There's a lot of articles posted there. We also have a blog from the Society, and there are a number of blog issues that have come out on this topic. And lastly, the Society has been maintaining a resource website for people doing benefit cost analysis related to the COVID-19 pandemic and ways to control it. And so on that website, you can find a lot of information. If you found this session useful, I hope you'll join the Society's future webinars. Over the next few months, we're presenting online some of the great sessions that would have been part of our 2020 annual meeting if it had not had to have been canceled. So for example, on August 4th, there's a presentation on surviving judicial review, which will look at how US deregulation efforts have fared in the courts. And then on Tuesday, August 11th, there'll be a roundtable discussion talking about recent developments in the market for vaping products and implications for benefit cost analysis. So I hope you can join those too. Also on the right-hand side of the slide, you can see we're trying to put online the workshops that we had planned. These are more in-depth half-day efforts to really dig into some important topics in the field. And those should be upline soon. And again, you can get details on the Society's website. And again, if you're interested in COVID-19 and your presence on this call suggests that you are, you're probably interested in the October 14th European conference webinar that we're going to have. This replaces our conference that we would have had this year. And the three keynote speakers are going to talk online. Jason Schoenbrunn, who did one of the very first studies of social distancing, is going to talk about the challenges of making such a study early in the pandemic when there wasn't very much data available. And then how has the early study worked out, how we might change things now. John Hassler, who's at the Institute for International Economic Studies at Stockholm University, will then give his perspectives on the COVID-19 pandemic and cost-benefit analysis. And Kristen Gollier will give us some comments. Again, there's details available about all this stuff on the Society's website, along with information about how you can help the Society for Benefit Cost Analysis by becoming a member or making a donation. I appreciate everybody's participation in this call, and again, thanks to Tom and Kip for a really great discussion. Bye, everybody. Thank you.
Thanks, Craig. Tom?
Thank you, Craig.
We're going to get all those questions.